and gentlemen, all across America and beyond. I'm J.Do, live right here in studio for our Thursday Ask Me Anything experience. Okay, appreciate the likes and the loves on TikTok and to our Zoom community and YouTube. Welcome. I'm one of the banking bros here at the Cash Compound, and what we do and like to chat about is how to help people save their money and spend someone else's. It's the infinite banking concept, but this is a live experience where you can ask us anything, okay? So what we do on these Thursday calls in the afternoon, 3:30 Eastern time, hopefully you can register for the Zoom link. That's where you're going to be able to see some of the feedback and see some of the illustrations and see some of the examples. We can't always do it with our friends over here on TikTok, but we are thankful that you are here. You can ask us questions. I'll lean in, and our YouTube experience, our Zoom experience, our TikTok experience are all live right here. We have a private Facebook group. It's kind of newer, so it's a great opportunity right now to get in and ask your questions before it gets really packed out with a lot of people who are interested in this topic and are going to maybe drown you out. But it's a wonderful community of people who are trying to figure out, how does this all work? What is it? What can I use? How do I do it? Because I love to save my money and spend someone else's, okay? What's up, Nick? Appreciate you, Jay. Welcome to the show this afternoon. It is Thursday, November the 9th, and we are here live answering your questions. Okay, I don't have anybody trying to get into the Zoom currently, fellas. Just an FYI. And we're now at 1 minute past the hour at hand. If I don't get anybody in the next 10-15, I might turn my focus on to TikTok for a while. All right, JT says, just put your money inside the regular bank and get 4.5% regular savings account for 12 months. What about the death benefit? What about a separate pool of money to be able to spend while your money still gets 4.5? What about that, Jay? What about guaranteed that it goes up? What about the 4.5% or so not taxable? What if you could get all of the things I just mentioned and what you want, but it lasts for more than 12 months? What about that? What's up, Tiger? Customs, appreciate you. 3 people currently on YouTube, so welcome to the YouTube community here. Tiger's in LA. Let us know if you've seen us in person before. Recently, my brother has been to LA. I have done a virtual experience for real estate agents that were mostly in California about a week ago. Tiger, were you part of any of that, or have you been knowing us for a long time? Okay, ladies and gentlemen, I'm live here on TikTok, YouTube, Zoom, and we're helping you guys experience the Save and Spend system. If you don't have this book, this is where it all starts from. Becoming Your Own Banker. Nelson Nash, this young man right here on the back, he died in 2019, God rest his soul. What he discovered about money is changing lives over and over and over. And the reason is because it's true, it works every time, and it's always been here. How about that? How about them apples, where you have guarantees, growth, and cash flow? Oh, what's up, Tiger? Appreciate you. All right, yeah, you just missed my brother. 2 weekends ago, he was in LA doing a presentation. And your book is arriving today. Wonderful. Okay. All right, we got Coach Rob coming in, making a fashionable entrance. That's how he likes to do it. One of these days, we're going to teach him how to use a computer, but I think he purposely doesn't come in, so he never has to learn anything. All right, Robert. We got you?
Yes, sir.
Yeah, I got you. All right. We don't have anybody joining us right now from Zoom, so we actually don't need these at the moment. Okay. But we do have our community over here on Tickety Top. Coach Rob in the building right now, ladies and gentlemen, and YouTube. We got some folks on YouTube right now.
All right. Let's
talking through the infinite banking concept as we see it, which we like to call the Save and Spend system. 3-cup setup is that visual right here. You can see it there from our TikTok community. So if you want to do your part over here, because I got these old eyes, help me understand what the heck is going on in these small comments. I can't tell.
My wife is Chinese and bought a house in 4 years 4 years ago for $100,000 is now worth $300,000.
Congratulations. The question is cash flow. The question is cash flow. So what we talk about here is how to utilize our money while having guarantees and safety. Okay, so we're going to have liquidity. We're going to use our money. So let me know if you have questions about that, or you'd like to potentially leverage some of the equity you might have in that home so you can start yourself a privatized banking system. Maybe that's what you want to talk about. Maybe it's not. Robert, how you been, man? What's on your mind?
I've been doing good. One thing that just came to my mind with this question here.
Okay, but Tiger, you spoke to Tiger yesterday. Welcome.
Yeah. What's up, man? How you doing?
Tiger, was Robert late to that call too? That's what I want to know.
I was on call. Actually, I called him ahead of time.
Okay, look at it.
Yeah, I called him ahead of time.
That's why he's excited and he's back. Okay, very good.
My man's. We had a good conversation and we were breaking down. We were comparing the concept to a lot of things. Really, it was more of a philosophical conversation. We actually are scheduled. If it's Ty, I think it's Ty Long. We're scheduled to talk again this coming Saturday.
Oh, Ty Long, yeah. I think I saw Ty in maybe it was TikTok or it was even the Facebook page. Ty, did you join the Facebook page?
And yeah, look, he said
okay, he was on. He was on.
I'll be on it, man. So,
right.
so we were
every other day.
We were discussing a lot of philosophical reasons behind why being your own bank might be a good idea, and we were just talking about stuff that you already do. Like for an example, there somebody in here was talking about the more having a home that has some equity in it, because the price of the home went up. A lot of the times, I make those kind of comparisons too, like to the policy. Same way you have equity inside of a home, we're just borrowing against the equity of our policy. That's what cash value is. Right. And I made some other comparisons. When me and Ty were talking about 401ks. What's the differences and how is this kind of alike to a 401k? Okay. But at the same time, what are the major differences and benefits compared to having a 401k? And we were talking about how you could retire using your whole life policy while all in between at times still having access to the cash. As we all know, with a 401k, it's kind of a lock-away method where you're not going to have access to the cash the way you want to. Right. And there's also taxes and penalties that can be involved with that. But here, there's no taxes, no penalties. And he can get guaranteed growth on his cash, which we were talking about before, the roller coaster ride, it being an investment account. We were talking about the guaranteed compound interest that comes from the policy and how you can use that and to fuel your retirement as well as other things and ambitions that you might have. So
love it. Well, Ty, appreciate you joining us for those conversations, man. It's only the beginning for you, so we congratulate you coming to us from LA out there. And we got somebody on our Zoom community who joined us. Shout out to everybody who's over here on TikTok as well.
I got you.
Yeah, you can go back and forth every once in a while.
I got you.
All right, so Super Void Mac, appreciate you being here, a registered participant in our Zoom here. So afternoon to you, at least for us, it's 3:30 p.m. on the East Coast here. We're in South Carolina. We practice and help people do the infinite banking concept all over the country and a little bit beyond, because we got a little Puerto Rico in there, Virgin Islands, Guam, U.S. territories.
I've got somebody in Alaska.
Alaska, let's go, right? Alaska's in the United States, but it's not in what's that big C word? They asked this in school.
It's not in our continent.
No, it's North America. The other C word, contiguous. There's only 48 contiguous states. The ones that are, you remember that word?
Because remember they added two more.
Hawaii and Alaska are not contiguous. Yeah. Okay. Super Void Mac, put in the chat out there if you can hear us and you're safe to do so. We love to hear from you in the chat. You are our current registered participant who can see and ask for. We'll give you a little precedence. Is that the right word? Because we can show you things that other people can't see. Okay, so if you want to see something, we can walk and talk through that as well. Okay, so my story, to back you up a little bit, in 2016, I started my infinite banking journey, my save and spend system. So if you can see me out here, I started saving dollars that I was making right here. Inside Premium, Cup 1, the red one, of whole life insurance. If you save your money here, the insurance company must provide you with benefits. Number one is life insurance. What's the main thing Premium buys?
It's going to buy you coverage on your life.
Boom. It's going to buy you Cup 3 coverage on your life. That's death benefit. It's a payout. It's peace of mind, right?
Correct.
It has to pay out because it's whole life insurance. Now, Robert, I took a call from my man this week, a guy named Gary Gary, I forget where you are out there if you're listening. I took a call from Gary and I said, "Hey, Gary, just for kicks and giggles, my friend, how long do you think a whole life insurance policy lasts?" The reason I'm bringing this up, exactly, he said, "Well, most people live, I don't know, about 65, 70." I said, "Nope, try again."
Yeah,
Your whole life.
Life.
Your whole life. So if you die tomorrow, it lasts that long. If you die when you're 100, it lasts that long. Right? If you die when you're 115, it lasts that long. Whole life insurance lasts your whole life. In the blue cup here, cup number 3, the insurance company must declare, day one, put it on paper for you. We'll look at it together. A pool of money, that is the coverage on your life, like Robert said. It must pay out. It's whole life insurance. Cash value, cup number 2 in the 3-cup setup, is where the magic starts to cash flow for you. The magic is the premium you put in, it really is. But where it starts to cash flow for you is the pool of money, cup 2 in the middle, from the death benefit. It's how much of the death benefit is paid up, paid off, paid for. It's equity, like Robert was saying in real estate. It's how much of it could be used, losed, abused. Losed is not a word, but it rhymes. You know what I'm saying?
Yeah, it's possible.
Yeah, I'm trying out here. You know what I'm saying? Okay, so we're talking about utilizing cash value, somebody else's money, OPM, while your money is still right here in the first cup. Compounding, growing, there are guarantees to that dollar amount. Don't go down, don't go backward. It doesn't get more expensive, and it has guaranteed growth on it. So
Correct.
It's going to buy more benefit for you and cash flow more over here.
We got some questions on TikTok.
Let's go.
Here. So JT, you were saying, so yeah, JT, just to bring a little bit of clarity to it. Yes, you can borrow against a 401k. That's correct.
Yes, up to $50,000 in most cases, right?
Correct.
So there's a limit.
There's limitations, and also too, there's restrictions. So you can't willy-nilly say, "Well, I'm ready to borrow against my 401k." It's within a window, and you're not in control of that window.
Control is a big part of utilizing whole life insurance for banking. Control, love it.
Also, too, as far as my understanding of it, and maybe if I'm incorrect, please do correct me. But when you actually do banking with a 401k, you're not increasing the value of your 401k. You're simply taking dollars out, and then you're replacing those same dollars back into the system, which is a good same thing we're doing here, right? The difference is if we make a purchase using our policy and we put back more than what we took, our policy grows from that. So our policy actually goes up, and we can control how and when we pay it back. You don't control how and when you pay back that 401k loan because, like I said, that's in the control of the company, John Hancock, Fidelity, whoever you're with, right? And there's going to be a window when you can take and a window when you have to get that money back, so you don't have any kind of penalties for that.
All right. Hopefully we answered your questions. But if you have questions, comments, and concerns on top of that, give us more stuff in the chat over here on TikTok. We appreciate you guys. Double tap on the screen anytime you like, learn, or love something that we say, though. We love that feedback to understand. Robert, there's more out there.
All right. Mental Blaze, you inspired me to get my life insurance license. Cool, man. I'm happy that we were able to, well, probably Jeremiah most likely, right? But I'm happy that you were inspired by the content that you're seeing and you're still here viewing us and watching us. If you're interested in potentially learning more information, make sure that if you haven't already, follow this channel as well as even the Cash Compound channel, and also too on YouTube. If you want to know more about whole life insurance and the guarantees and stuff like that comes with it, we also talk about a lot of other stuff too. So
yeah. But if you're interested now, life insurance, a lot of people, it gets a bad name as a business sometimes because number one, people don't understand it. They don't understand they need it. First off, so you got to buy it from somebody out there. There's Jake's from State Farms and Flo's from Progressive. We think it's the best business there is. We're helping people. Nobody ever loses in a whole life insurance built for bank. No one ever loses. And it's mutually beneficial for all involved because the value of your dollars stay constant and go up. We just don't lose money. And also, we're protecting families, right? And all that type of thing. So, hey, we'd love to chat with you. If you need more mentorship about potentially getting involved, maybe there's a conversation we can have. We don't recruit people over here, but the right people find us.
Yeah, I want you to be the one to say that. That's why I was very
the right people find us. But we don't go out there and do a lot of aggressive recruiting. Okay, appreciate the comments and questions out here. I saw one about MPI. Okay, so a lot of people are seeing that. They're good marketers over there, and there's a lot to learn from them. And none of that stuff is about MPI. Don't learn that stuff. What you want to learn is marketing. We like them because we like to get out there and reach the people. However, got to be real careful. Let me tell you one or two differences. Robert, will you turn the camera a little bit so we can see the three cups? Okay, when we're utilizing the MPI system, the product, we call it save and spend system, right? The infinite banking concept, we just call it around here the save and spend system. We got to have a product we can do that from. It's whole life insurance from mutual companies that pay dividends. In the MPI world, those guys over there, I'm sure God loves them, but yikes, they're not using a guaranteed, growing, and cash flowing tool. So number one, they talk about long term. They talk about retirement. They better, because we don't know if we're going to have any cash flow with the product that they use. They use what's called indexed universal life insurance. Indexed universal life insurance is not guaranteed to grow and cash flow for your whole life.
For the majority, and as far as I know, and I've seen it, even Curtis Ray himself said this, is that you're not having cash flow. Definitely guaranteed, you're not having cash flow for the first 3 to 6 months. It's a probational period.
Sure, and there's surrender charges, there's all sorts of things, but I think I can break it down simply for someone who might have a question who's still here. Double tap on the screen if you want to talk through MPI, you just want to understand what it is, you've heard of it. If you're following us, you might actually also see their stuff because of the algorithm. So MPI is utilizing an indexed universal life insurance product, and that product goes up in cost each year you get older. Annual renewable term insurance. Oh, glad you asked. There's no liquidity in term insurance.
So to break down what Jeremiah is saying here is that part of what you're paying is not actually giving you any cash.
Zero.
That money is simply going to buy you term insurance, which at some point in time will end inside of your, hopefully you do outlive that term there, and it will roll off. So this death benefit actually will go down.
Well, it doesn't have to roll off in index universal life. That's the whole point. You can keep it, but it has to go up in cost.
Yeah.
It has to go up in cost. So it's tricky if you just don't know anything we're saying. Hopefully you know one or two things, and we're not confusing you. So the second thing you need to understand is that in whole life insurance, there are guarantees of growth. Okay, guarantees of growth. And in index universal life insurance, they take the guarantees of the growth that they give the whole life people contractually, and they go buy things in the market called options. Now we're in the market, so there's ups and there's downs, there's left and there's rights. So we need to understand that there's no guarantee to go up or cash flow, but the cost is rising. If that's enough for you today, we won't poo-poo on our friends over there at MPI, but yikes. If you don't understand what's happening, you better understand that it's not guaranteed to grow in cash flow for you. And their system is built to make you think that it is. That's all.
Okay, cool. We got right here. We said, let's see, wasting time says, how do you pull out, or I'm thinking you're saying borrow against home equity to fund an insurance policy. So, you would need to get, I got to remember to rotate this thing. So you would need to contact a bank, and they'll evaluate your house, and you can borrow against the equity of that home. So for an example, there was one inside the chat earlier. He said that his wife bought a house for $100,000, I think it was, and now it's worth like $300,000. The equity of that home is $200,000. How much it increased by in terms of inside of the housing market. You could then go to a bank, and they'll be able to see that, and they'll say, okay, cool, we're willing to let you leverage your home, borrow this much based on the equity of your home, and while you're still living in it, you might even be still paying a mortgage or whatever the case is. You can borrow against that home and use it to fund a cash value life insurance policy, of course, with dividends with the mutual companies. So there's some specifics there. You want to make sure that you're not just saying, hey, let me go fund a whole life policy that got some dividends. We want to make sure that it's still set up and designed for banking. So if you're interested in working with us, you want us to help you out doing that. Once you do get that HELOC, home equity line of credit, just make sure you come back, click the link in the bio, and you'll get myself, Jeremiah, or somebody else here on the team that can help you use those funds and put them somewhere where they can grow and flow. And most importantly, they're safe. So we have the opportunity to get some more cash flow and even some more equity from the equity that you just borrowed. We have another one.
All right, and welcome Linus out here on our Zoom call as well. Linus is part of our paperwork squad, and our friends at the Money Multiplier handle our processing, and so he's on the Zoom. We are live every Thursday, 3:30 p.m. Eastern Time to help you understand what we call the save and spend system and get you started in the process of understanding how you can keep your money. Keep it, all of it that you want, the save and spend system.
So Gina has a question for you here, Jeremiah.
Yep.
What are the cons?
Cons. Well, the cons are, number one, you've got to understand something, not just earn more. You got to understand something. All right? Because Robert never said you had to work harder. You had to get better at business. We didn't say that. You need to understand something. And that crazy thing you need to understand that I did not understand even when I started is banking, is financing. I didn't know what those terms meant. So if you don't understand that, you'll never get this. You'll never understand that there's only two ways to buy things. You give up your money and what it could have done for you, or you borrow someone else's and pay for it. And if you don't understand what I'm saying, that's okay, but that's where I started. And if you don't understand that, everything else sounds French to you because you're probably going to start thinking this has something to do with an investment. So then you're already off course. So great question. When we spend money on shirts and clothes and food and transportation, we are giving up our dollars in most cases, right? There's a shirt. You're not going to finance a shirt in most cases. You're going to pay for it with your money, but you gave up your money and it won't earn anything anymore. If you put your dollars inside the red cup, Robert, let's see it again. If you put your dollars inside the red cup premium of whole life insurance, it will stay with you, continue earning and cash flowing here in the second cup, and that's what you can buy your shirt with, let's say. But I was a guy who always spent my cash because most people do understand that borrowing from third parties means that you pay for interest. So the second thing that you probably need to understand is compound interest. Day one of something compounding is not the best day. So we're going to have to think long range. That's rule number one, according to Infinite Banking Man himself. You have to think long range because you're going to have growth and compounding forever on your dollars, but day one is not the best day for that. No. It'll always get better. It's guaranteed to, and you'll have a separate pool of money to finance with while your dollars stay with you. But if you don't understand that, you'll probably be thinking this is a weird investment. Okay, hopefully that's a good answer for you. Appreciate that. If we ever answer your questions, double tap on the screen. And if you click up here, I think it's up here on your screen, you can click our logo, go to our regular TikTok handle, get a free consultation call, and a video is waiting for you. A 1-hour video with numbers, with charts, showing you how to pay off your debt with OPM, someone else's money, showing you how to buy cars with OPM, someone else's money. And that'll probably help you get started.
I think that is the biggest component of it, Jeremiah. I think that more out of all the people I've talked to, most people are still struggling to fathom other people's money, utilizing, because it doesn't matter how many times they say, yep, I got it. They still, it was just like myself, is that I guess our brains have a hard time wrapping our minds around the fact that we are not taking from what we put in.
Right.
And so I think that's one of the hardest parts for people.
That's what we try to show the 3-cup setup. The simplest way to understand the infinite banking concept on the internet is the save and spend system. So you can physically see these are not the dollars that you worked hard for. And so if you don't understand those things, you get caught up in it. You need to understand the right tool to use for this process, or else you're going to have lots of cons if you use the wrong tool. So stick with us, follow along, keep learning. Appreciate you guys out there.
Mental Blaze, man, I appreciate that. He says, I think it's the best. Also, it's a matter of education, and you guys are on the money. I appreciate that, Mental Blaze. Gina says, I love this. Thank you so much, Gina. We're happy that we were able to help you guys out.
We on the money. I like that. Right here. Pop, pop, pop.
All right. No, it's okay. She says, apologize for being financially illiterate. It's okay. I think we all started ignorant inside of that.
I know I did.
Yeah.
I know I did.
I mean, I thought that you were supposed to get a check and blow it.
What's crazy is where I am now over the course of the last decade or so, 12 years, 13 years being an entrepreneur, almost 9 years of doing infinite banking. What I have learned in that amount of time sometimes amazes me, because where I started,
I thought that's what you're supposed to do.
when I was Robert's age, there's some years between us. When I was Robert's age, you were not asking me for financial advice or how to get cash flow going. That was not my expertise. Shout out to all my friends out there on the YouTube channels. You know that you can follow us on YouTube as well. I believe you might have to check both. We're in the middle of reconverting our page, I believe, back to the Cash Compound, but you might find us there as the Banking Bros. Appreciate all the follows and the likes and the shares over here from our TikTok community. All right, we're fielding questions here. This is a Thursday Ask Me Anything. And if you need a coach to give you a cash consultation, you've come to the right place about doing this possibly for yourself. So you can click the link in the bio and start that conversation with us.
What's up, baby? It said, and borrow $6K to pay my bills.
Let's talk about 6K. Let's go.
It literally hit my mind. I was
Okay.
like, that's crazy. And this is really, really good because this is like.
But now I'm gonna have to put this together because we'll use this example forever. Since it's an example, you and I can for 10 years we can use this example. Okay, Robert.
Go ahead, storytell this thing.
Okay, I'm gonna give you an introduction, and Robert's gonna jump in. Okay, once upon a time, ladies and gentlemen, we realized that there was a pool of funds that could be used for financing things. I ended up having this pool, and I was looking around in the wild world of sports, trying to figure out how can I put my money to work. I have this pool of money. Let's say that it's about, well, actually, let's say how much was in there. There was $10,000 inside of my system in cash value and a policy that I owned. Now, why in the world did I have these dollars and how they were sitting around? Well, it's because I had been funding through premium an insurance policy, a guaranteed whole life insurance policy that bought a big number, hundreds of thousands over here. Cash value then became how much was available. And I'm out here looking for opportunity. Now, I've heard, Robert, this is where you come in. I've heard that opportunity will find you when you have the money. Would you like to jump into this point?
Yes, sir. So opportunity definitely found them. So what I ended up doing, and I scooted over a little bit. So what I ended up doing is I needed some cash so that I could get a car. So I was getting like a used vehicle, and it was a little bit under $6,000, but I knew after the taxes tag and all that good stuff. So what I did is I got a pre-approval from USAA, and I saw
That's my bank as well.
Yeah.
Shout out to them. That's like the Chick-fil-A of banks.
Literally.
Because they're nice on the phone.
Yeah.
Now, I don't borrow money from these people,
No.
but I'll sit my wife's grocery money there and our Amazon money there.
And they got some good cashback rewards.
Okay, yeah.
Okay. They got some nice perks or whatever.
All right.
Is. But one thing about USA is the same thing here. I don't do banking with USA. So the thing is that I did want to get a pre-approval to see. I knew, okay, if I'm going to go through somebody USA, it might be pretty favorable. So let me get a pre-approval on the vehicle that I want. And that's something that anybody should do before you go to a car lot or anything like that. And you let them do it for you. You need to get a pre-approval on whatever it is that you want to actually buy. And then from there, now they have to negotiate the price in your direction instead of you negotiating based on their terms, because now you already have that pre-approval.
That's a good thought.
Yes, sir. That's how you're supposed to go about it. So the second part to what I'm saying is I showed this pre-approval to Jeremiah, and I'm like, hey, man, if you can match these terms but a little bit better, right, a little bit more favorable for me, I'll go with you, because I would much rather do some banking through you than do some banking through them. Right?
Ladies and gentlemen, stop right there. Do you understand how we just we found each other? Robert knew that I had a pool of money, or he assumed I did, sitting around in cash value, and he came up with some terms from a third-party crediting lender that he'd have to pay. Remember, there's only two ways to buy things. Yeah. He'd have to pay his money, or he's going to have to finance it through someone else's money. Well, he knew two someones. One of them was the traditional conventional bank, and the other someone was me. So he hits me up, keep going, and you said?
Yeah, so I was like, man, here's what I want to do. I said, can I get the same exact amount of cash at 10%, and I'll pay you in a year's time, versus the other terms where I believe it was 36 months, 48 months, and 72 months were the different terms that they have for USA.
And the rate was not 10.
It was 17.
17?
Something. It was 17% and some change, right? So I was like, man, I would much rather pay less interest, and if I can do that, I also wouldn't mind paying it back in a shorter amount of time, because it's not a lot of cash that I'm borrowing. So with that being said, is here's even more like this. Why I say it takes a little bit of financial genius, and this is why you want to build your financial education because it's important. I'm a person that always needs liquidity at any given time. All right, whether it's going into the market or just having, like I got a baby on the way, so fundamental reasons as far as I might need to dip into some cash and be able to handle some emergencies or anything. I don't know what life holds, but what I do know is I didn't want to pull all of the cash value and equity out of my policies and have none until I paid the loans back or paid more premiums. So what I did was I said, hey, to make sure I stay liquid, I'm going to borrow from Jeremiah's banking system to do the transaction. All right. So I can do that same transaction. I paid the interest back. I paid the principal plus the interest back to Jeremiah, in which case now he has it back inside of his policy. So
So let's do the deal. So
Yeah.
I call the insurance company. Give us a little. Well, I'll do it.
Okay, go ahead.
No. So Robert calls me. There was about $10,000, I believe, at the time that he called me. It was last week. I borrow with one phone call, fill out the paper from the insurance company. Said, "Yo, show me the money." That's it. $6,000 comes to me. I have $6,000. We agreed over the phone. Look, let's do 12 months and 10%. I was like, I'm down. So we put that on paper, and I gave him the money just last week.
Boom.
Okay, now look at this. I just borrowed the insurance company's money while my money is still in this policy. So my money is still growing. Remember, there's guarantees there. Double tap if you guys are starting to see this for the first time. My money has not left my control. The money I sent Robert has not left my control because I got it on paper like normal. Hey, you should pay me back. Here are the terms. Here's the amortization. Boom, we're good, right? And he said, yeah, sounds fine. I can do that payment. And I said, when do you want to start? Did I not?
Yeah.
When do you want to start? He's next month, December 1. Sounds good. You see, no arm and a leg. I don't want his firstborn. He can have the baby.
Yeah.
I got plenty. All right. And I said, you just hit me back with my $527 each month for 12 months. My money's still compounding. Appreciate the love. You guys are getting this. Good. Okay.
So I'm going to add some interest to what Jeremiah gave me. Now, let's assume 12 months has passed.
Yeah.
Now you have your dollars back.
My six.
What are you going to do?
Okay. So I'm going to get these dollars back. Okay. We've got the amount he borrowed from me, $6K, goes right back. Now I've restocked my stash. I still have it. It's still liquid. I could give it back to him. I could take it, whatever. But I also got some of his money. That's what interest is. It's some of Robert's money. He gave me back mine. Praise God. And mine, this is now mine. It was his. It's now mine. I'm going to stick it right on top of here. I've replenished what I borrowed from the insurance company. This is the extra. And if I put it here in premium, remember there are guarantees here. Some of those guarantees are growth. It buys more insurance.
So now we got more of a death benefit, more
of a death benefit, higher. My life is better because my family's life is better. I'm sorry, and there is more cash value, liquidity. I've recouped all the money. My money never left. I have a larger death benefit, and Robert's got the car. Now, Robert, you got to remember that I said this example on the live TikTok just the other day because it's fresh in our minds. We just started this deal, and somebody said, you just lost your money and you lost a friend. That's what they said in the chat. Yeah.
And it was honestly, that's about true. A regular, any other time, I would say this is a possibility. You just lost your money and a friend. But no, one thing is, I tell anybody, do not borrow past your collateralized limitations. So basically, don't over leverage yourself. Never go borrow more than you would ever be able to liquidate yourself and pay back. So one thing about me, like I said, I'm really big on investments. Push comes to shove, God forbid, I could always liquidate some assets and take care of anything that I need to take care of. Being that I still want to ride the waves. The market is not something that you can just hop in and out of all the time, especially when you're inside of a utility-based investment. It can take time for that company or project to really take off and for them to do great things. So what I want to do is like I said, I want to have that liquidity. So therefore, I'm willing to borrow up to a certain amount of cash so that I can have cash on hand for, and like I said, it's not just about investments. It could be life things. For an example, with my girlfriend, her car had caught a flat. And then from there, it wasn't just ordinary flat. We ended up having to get it towed and all this other stuff. So you don't know what's going to come. It's never what it's supposed to be, right? So I don't want to be swiping a credit card and trying to pay it back within 30 days and all this other stuff.
20% interest.
Yeah, it's crazy.
25%.
And I just don't have any control over that. Borrowing from Jeremiah's policy is almost the equivalent of borrowing from my own policy. There's a little bit more terms and conditions there, but honestly, this is unlike any other loan that I would take because of the flexibility that's within that loan. We got to negotiate it a little bit better.
Right.
He didn't go run my credit report, none of that stuff like that.
I know him. So some people don't understand that the collateral that I needed was that he works with me. I know he has policies. I understand his work ethic, and I understand his ability to pay. And that's because of our proximity of relationship. So I'm not offering this to everybody who's in the chat right now.
Yeah, and that's another thing too. Like, don't go loan money to people just willy-nilly.
Put it on some paper.
You want credit and credibility. So
there you go.
That's why they got a credit score, because they don't know you like that. So it's like, let me see what other people said about you, and then maybe I'll give you some.
I know what to think about this man. So we probably got a bunch more comments down here.
Let's see.
So let's flick up. If we haven't gotten to your stuff,
half of those was people wanting you to give them some money. But he said, let me get $1.
Right.
They are selling insurance, aren't they? They have cool.
We just have walked you through. If you've been here for the last few minutes here, follow us at the Banking Bros right here on this channel on TikTok. Welcome to our Zoom community and YouTube out here. Go ahead and put stuff in the chat. We're answering questions. This is a live Ask Me Anything session every Thursday afternoon. But we want to help you guys understand what we just explained was not insurance.
Nope.
It was banking. It was financing for stuff we needed.
Yeah, and I think
it was a mutual beneficial deal. Mutual. There we go.
I think that people, you have to shift the paradigm. I think that, so here's the thing. There's more than one way to skin a cat, so to speak, right? There's more than one way to do banking. So, like, for an example, somebody earlier said, well, I can do something similar to that out of my 401k. People borrow against the equity of their homes. People can borrow against, you can borrow against stocks. Warren Buffett does it. You can borrow against plenty of things. You can borrow against precious metals.
Land. Whatever assets have value.
And you can borrow against your whole life policy. The reason why all we're saying is this. Out of all the things you can collateralize and leverage, whole life insurance, which is a guaranteed contract, is the best option to leverage when it comes to doing banking transactions. We're talking about making transactions. You're talking about life insurance. Now, yes, if we could do the same exact thing, like Brent Kessler says all the time, he says, if I could do the same thing with a bottle of water, I would sell you a bottle of water.
Right.
We are not in it because it's like, oh man, whole life insurance. We're looking at it and saying, whole life insurance is a guaranteed contract. I can predict based on a guaranteed contract exactly. So Jeremiah can look out 20 years from now and know how much cash value he'll have. Now,
minimum.
Minimum. Now, if he does some banking and they can pay dividends, which the company's been doing for the company, this particular company, what, 147?
I think it's 46.
Okay, I know it's up there.
I was born 39 years ago, so a lot longer than me.
World War I, World War II,
recession, depression, your mama, Obama, they've been paying.
They made it through all that. So literally, you already know you can project what you're going to have, and you can also kind of price in the fact that it'll look a little bit better than just that. And that's why we're saying doing banking is because when you get your policy, that's not the end all be all. That is nothing but the foundation. That's just the start. Now from there, do some banking, take some loans, pay these loans back plus interest.
Keep the money moving.
And when you keep that money flowing and growing, you're going to be able to have a way better death benefit. When it is time for you to pass away, you'll leave a nice legacy. And more importantly, you can do other things. Like I tell people all the time, you can kill 1, 2, 3, 4, 5, 6, 7, 8, infinite amount of birds with one stone. Now, you might need more than one policy, but the banking system kills more than one bird. Kills more than one bird,
but it's one foundational tool.
One foundational.
Okay, our friends over here, and if we've got somebody in the control room, Liam, if you're in there,
I got you.
I'm 39.
I asked this question on Chris Noggle Q&A, but wanted to hear you guys take. Have y'all tried funneling? I think it's funneling entire paychecks through the policy. Yeah.
Read the next thing that they said though, just to make sure. Oh, it's Gavin from our Facebook group.
That's somebody different. So
no, the last thing. No.
That's Gavin again.
Yeah, what's up, Gavin from Facebook?
Or even just the known bills before sending it out. For example, I have 1,000 that goes to the credit.
100. That's 900. You can't see it either.
No. The top one says. Oh, that is 900. I see it now. Oh, I'm sorry about that. Okay, I got you. I have 900 that goes to my credit card bill every month, utilities and subscriptions that I would like to go to work in my policy as well. I might be able to tackle this for you. So, one thing is, I had a Mercedes, and I don't know if it was bad luck or God, but I was leaving after paying $1,400 getting that bad boy fixed. But I mean, that was just regular scheduled maintenance. Wasn't nothing wrong with it or nothing like that. But it's expensive. It's $300 oil changes, all kind of stuff. So make sure you think twice before you go out there and get one. but what I will say is, I paid $1,400, drove it off the Mercedes-Benz lot. After getting some maintenance, took 2 lefts, and boom, somebody hit me, totaled my car. I didn't know
you just left the lot, the dealership.
I had just left the dealership from getting it fixed, because you can't just take Mercedes anywhere. That's another thing. You don't take it to your cousin. All right. So, boom, I take 2 lefts. Guy hits me, totals my car. I'm shooken up, all the good stuff. I go to the hospital. Long story short is, as like I said, it must have been God too, because that freed up a lot of capital.
All of a sudden, it was a blessing. You know what?
At first, it was a detriment. Then it was like,
of course, yeah, right.
I was like, man, I'm saving about $1,200.
I appreciate it. I sent that guy Christmas gift.
Yeah, I'm like, okay, I saved $1,200 a month, and I had gap insurance and all the good stuff. So they paid me out for the value of my car. But when I had all that free cash, what I started doing is like supercharging my policies as much as possible. So yes, if your expense to income ratio works itself out, you could take entire paychecks, put them into your policy, that's growing you a death benefit, and then from there you can collateralize that cash value. You can take this cash value to go pay bills or do whatever it is you want to do. But first and foremost is make sure that you understand the ratio in terms of what you're putting in and what you're going to be able to take out, so you don't come across,
especially in the early years, Gavin. And I want to be clear, because some people don't know this. What Robert said is absolutely true. I want to say it in a slightly different way. We're not direct depositing from your JOB into life insurance.
Yeah.
Sometimes people are asking that, just very simple. And so no. So we're not your boss, and your company you need to take these dollars in as regular income that you're working for, and your whole life insurance policy is going to be separate. You're going to physically or transactionally pay that bill yourself and put premium in that deposit column, red cup, yourself. Okay, so it is not going to be something that your job is going to put and funnel directly in there.
Yes, I actually called the insurance company and told them to take the money out of my account to put it in my policy. So I didn't have it like set up to where my job direct deposited into my account. But that's a good thing too, because people do confuse that. That is Gavin over there laughing. He like, man, this dude over here is wild. Yeah, I'm telling you, I thought it was a blessing. After a couple of weeks, I was like, this is God. He knew I can't take it no more.
We're trying to help Robert out here.
He knew I couldn't take it no more. Buy some BITW. I know what that is. That's wrap Bitcoin before the Bitcoin ETF is approved by the SEC. So yeah, they basically came out and said they were going to approve it, then they kind of retracted it. So we haven't gotten official approval yet. But if I was going to make an investment into cryptocurrency right now, whichever one you like the most, I still would maybe leverage my system. And the reason being is because if you understand cryptocurrency, you understand it is volatile, and that's why I need to keep liquidity. Now, just like I was saying earlier, I need to keep liquidity because I've been rich and then I've been broke and then back rich again. And
but see, and that's why it's not about a pool of money; it's about cash flow.
Exactly.
Right?
Exactly. You need cash flow.
You need cash flow.
Now, another thing too is when you do get the whole, when you get that run up and you do get the rich part of that cycle, you need to be taking some money off the table. So initially, that's how I got into infinite banking to begin with, is because when I did go up the first time, I'm like, oh yeah, give me some of that. I took some of that off the table, put it into a policy. So I don't want to go too in depth with you guys, but I did a dump in, which is just a initial deposit into the policy to kind of supercharge it, jump start it, and then I also set up a reoccurring premium on that policy as well. and that gave me a cash flowing asset. So if I were you, I would take.
I'm creaky chair.
Oh, okay. I'm like, what's going on? So if I were you, I would take advantage of the fact that you could cash flow this policy to also go and buy some cryptocurrency if you wanted to, because that way you don't have to worry about how long it might take before you can actually get out of the asset. But yeah, I'm a Bitcoin advocate. I think that the SEC is definitely going to approve the Grayscale ETF.
Gina, appreciate those roses out there on TikTok. Ladies and gentlemen, once again, if you want a free consultation with one of us, we have one-on-one consults ready for you this week. There's still some time to get it in so we can talk about how you can get started with this process and get your questions answered on a personal level. This is Personal Finance 101. Keep the money that comes in. We want to help you with that. We've got lots of tools for you, including a 60-minute video to all of our friends out there on our TikTok pages. So follow us at the Banking Bros. Go ahead and follow us. Click the follow. I know you're click it right now. There you go. And share. Let a friend know that the truth about money will set them free. Okay, we're probably not going to stay too much longer. Not a lot of questions today from our general community, but we do have a Facebook page. Hey, we got a new Facebook group, not page, and we want you to be a part of that community as well. Gavin's out there asking questions left and right. So.
Yeah, Gavin said that's exactly what I want to do. Is supercharge it and better than the cash sitting there for a month. Thanks for the answer. Yes, sir. Make sure you take advantage of that. Supercharge that policy, Gina. Thanks so much for the roses. Also, too, I saw that you did respond to what I said about the Bitcoin ETF. I think it's Jawan. He says it's a good idea. He agrees. He plans on sticking with it for several years. Exactly. So it's understanding that the market takes time. And so in between that time, you have an opportunity cost, is what we call it in economics. And when you have that opportunity cost, you have to understand is, like I had Brent Kessler on, which is, I would say my mentor kind of got me started into what I'm doing now with infinite banking. And I was interviewing him, and Brent was talking about why he has gold and silver, but it's not really doing nothing for me, though. It can increase in price, but it doesn't cash flow. It doesn't produce any interest, and so on and so forth. So even if you have cryptocurrency, there is cryptocurrency that will allow you to do staking and yield farming, and you can produce some passive income. But what I'm going on to say is this: it's understand that it can take years for something to happen the way that you want it to, especially in crypto. The bear market is usually between 3 to 4 years. So if you time it wrong and you get caught in that bear market, you have to wait a while for that turnaround. It doesn't make crypto bad. It doesn't make the stock or whatever investment you're in bad. It just means that the market takes time to produce those gains for you. And so in between that time, how much money could you have made if you still had liquidity that you can take and do in and out, or whatever the case is, whether that be the market or put it into some other kind of investment or tool that could cash flow for you.
Appreciate those questions and thoughts. All right, we're going to take a few more, I guess, from TikTok and our community out there. If we don't get anything from our Zoom audience,
premium is $500 a month, $6K a year, but I can only borrow partial on it. Why? The reason why you can only borrow, so for one,
you don't borrow any of your money. You're not going to borrow any of it, not one of those dollars. So show them the three cup setup.
All your $6,000 is still here. So this is what you did. You put in $500
a month.
500 a month, yeah.
$6,000 a year. Okay.
So let's assume that years went by, you put in your 6,000. Whatever you've had access to is based upon the fact that your 6 bought you a larger sum of money. So if you look at your death benefit right now, I'm pretty sure, I know your death benefit is way more than what you actually put in when it comes to that 6,000. And then from there, the insurance company said, here's some of this death benefit that you can use and collateralize right now while you are alive. So they're giving you equity. They're giving you some of the death benefit you can spend right now, and you can use that to do whatever it is you want to do. But your 6,000 is still here growing, compounding the entire time.
So here's what you probably missed. I can't tell who you are out there. The first thing that you missed is you bought something with your money. You bought death benefit. You bought money with your money. Exhibit told me, we heard you like money with your money. So you bought money with your money. Here's how much of it is usable so far, but it's not your contribution, your principal. Your premium is not affected by you borrowing from the growing and increasing pool that the insurance company gave you of their money. Do you guys get it? Double tap on the screen if you understood that. How about them apples? Okay, that's very important to understand. And those numbers will continue to grow throughout your whole life. So Be patient, think long term, and keep at it. It'll get way bigger than the contributions you
don't
get.
let your brain trick you.
Yeah.
All right. Remember, withdrawals are not the same as loans. Withdrawals are not the same as loans. When you put in your money, you take your money out. That's a withdrawal. When you put in your money and you're able to leverage someone else's money, that is a loan. Don't let your brain trick you. It will do it.
Appreciate you guys. I think we're going to wrap things up here in just 1 second. Remember to follow us here at thebankingbros.com, the Banking Bros channel. Hit us up. We've got all sorts of resources and tools for you. We're working on so much great extra stuff. I hope everybody here joins our Facebook community. We got a group in there. It's private. It's open. You can ask your questions, get answers, start when you're ready with this process. Appreciate you guys out there on YouTube. Shout out to Gavin giving us a lot of stuff. And Ty, we look forward to getting you started. If Ty didn't get started yet.
Yeah, I'm talking to him and his girlfriend Saturday.
Perfect. All right, Ty, we'll have a conversation with you this weekend, my friend. Appreciate you guys out there. Thank you. Gina, yes, death benefit rises. When can you pay off that loan? Whenever you want.
All right.
Ty's
He's on here too.
Ty's everywhere.
Yeah,
Ty cannot be stopped.
This man is going crazy. He's
All
like,
right.
I can't wait. All right.